Hey guys, what's up? This is Andrew for TRENDLINES.com. So for those who are watching my video for the first time, I'm a professional trader and I'm doing YouTube videos where I use technical analysis to show you guys how I build my different scenarios and how I set up my trades. So in this video, I want to make a long-term analysis on GameStop. Let's get into it. Alright guys, so what is the situation here? So this is GameStop. Let's do something a bit longer term. Let's try to take a step back and see what is happening, where the price action might be heading, what kind of signals technical analysis is giving us. Do we have something clean? And try to use some, for example, option interest data, some short interest data, and see if this all makes sense and what the price action might be doing. So let me sum up the situation here like I did with AMC. Basically, I'm doing those two a lot because this is what you guys want to see. This is the first reason. So I'm trying to give you what you guys are looking for. And the second reason is that they're actually moving together, all right? They are both like some iconic stocks from Reddit, Wall Street Bets, and you can see that the flows are actually coming usually together into these stocks. Sometimes we see the flows coming out from GameStop and coming in AMC, sometimes the other way around. But when we have some strong bullish moves, it's usually correlated. That's why the analysis I'm gonna make are quite similar, but they have some differences as well. For example, on AMC, we just had the 1-2, and on GameStop, the correction here was actually shorter and the 1-2 occurred before in my Elliott wave counting. So those are minor differences, but still it's not exactly the same thing. But on the longer term, it looks actually very similar. We had this strong move up here, which was a short squeeze for GameStop, not a short squeeze for me for AMC. Then we corrected ABC. So this is a 1-2, 2, 3, 4, 5. All right. Once again, my target, long-term target is 800. All right. I'm not sure when we're going to reach this level, but I'm confident we would. Okay, something like this. Everything is very clean here. 1, 2, 3, 4, 5, ABC. Here we're having a 1, 2. All right. So this is the difference between AMC and GameStop. GameStop is actually more bullish here. The correction was shorter on GameStop. And we're having here this 1-2 with the ABC correction, and we're starting the 1, 2, 3, 4, 5. We are seeing the volume slightly picking up. You see here on those bullish days when we actually break the 160 level that I told you guys was very important to watch. We broke it. We are having a nice bullish development. And the question is, what are our targets? When is the next correction going to happen? So I'm going to try to give you here some hints about what we can expect. So to do that, I'm always going to use the same methods. I'm going to use horizontal and sloping trend lines where I had consolidation in the past and some nice reactions in the past to actually bring me to the most likely levels we could go to. And here, when I do this exercise, the first thing, so this is the price action we're having now. The recent price action is giving me a highest level at 216. So I put this trend line, all right? This was a rejection level. It's gonna act as resistance. Then you can check if in the past it was acting as support or resistance. You can see that it was here. It was actually a support level in the strong move down we had. Then it got broke down with a strong gap down, sorry. Here as well, it was supporting the price on the daily time frame quite well and rejecting it as well. So this 216.17 level is an important level that we're gonna see acting as support or resistance in the future. First is gonna be resistance, then it might be support, for example here, all right? So this is a level that you can already have in mind, guys. I'm giving you this level quite early because for now we are only at 178. Once again, guys, I may have some delay. I'm sorry about that. I don't have time to do daily updates. So I'm doing few videos in the same day. I'm just publishing it, on a daily basis. So sometimes I have some delay and I'm sorry about that. So when I'm doing my video, GameStop is trading just closed at 178. And I'm expecting the price action to keep go higher. So I hope I'm going to be right here. But if I'm wrong, I'm still going to publish this video because I think that whatever happens here, we might still see 216 trading soon. I can even tell you when. This is the beauty about technical analysis. 216 is the level I got using horizontal trend lines. I show you guys how I did it. Then I'm going to connect the high that I have here. So the all-time high, 480, with the second high we had in this correction, which was 340. And when I connect those two highs, this is giving me this trend line, guys, all right? And this trend line is going to act as resistance as well. Very interesting is to notice that those two intersect on the 4th of May. So this is giving me time target and a price target. This is giving me some very precise information. This is telling me that GameStop might be trading and be rejected on the 4th of May at 215. So once again, this is very precise information. The probability I'm right here is not that high because it's a very precise scenario. So maybe we will go there the next day, maybe the day before. But I noticed that when I do this kind of reasoning with intersection between different trend lines, it gives me some level. And if it fits with the rest of my analysis, which is, for example, here, a third wave of Elliott that would then need to correct somewhere. So maybe it's going to go here and then, maybe we're going to break it right away and retest it. It can be as well like this. There are different possible scenarios, but this is telling me that there's going to be a lot of selling power at 215. And of course, as this is just in this wave development, we're going to see a lot of buy the dippers coming probably, I'm not sure, 170, 190 level, all this area. So for now, we need to be focused on what is happening around the 3rd of May. Are we actually getting close to this level or not? One other information I like to use, guys, and you know that it's the option open interest. I'm an option trader, guys, and you can check my previous video. I had here 21%, which was around maybe 12 million shares. I don't remember. You can go and check, but this is the total synthetic short in shares equivalent. So this is not the synthetic short we're having right now because you need to use a delta that is here that I compute myself, guys. I showed you guys this many times. I use this barbaric formula, but that is actually quite simple. The open interest times 100 times the delta and times the level of GameStop, and this is giving me the synthetic short. So for now, we're having around 7% of the total float share. That is 55 million of short interest. And if GameStop goes to 10,000, whatever, we converge to 32%. And before, what is interesting, guys, is to see the difference, because this is showing you what is the sentiment, and the difference between this week and last week is huge, guys. It's 10% of total open interest. So once again, it's not delta 1, so it's not 10% of short interest, it's maybe 1 or 2% of short interest, but on the upside, it would eventually be 10% more if GameStop goes above all these strike levels. And let me also show you guys that the levels are just insane. The maximum number of shares is 2.5 million, and we found it at the 800 strike level. Once again, I get all this information from Yahoo Finance, which is public information. So go, guys, and check it out by yourself. You're going to see that this information is correct. And this is very bullish sign, guys. Once again, for a firm like Apple, we usually have 0.6% of total synthetic short interest. For AMC, we're having 6% right now at the 11 level. We're having 5%, and for GameStop, we're having 7% with a maximum at 32%. So guys, this is what can create a gamma squeeze. This is very bullish. And one more information I like to look at, guys, is the volatility of this 800 strike. And I told you guys that it was 193 last week, so now it's 191. So it's slightly lower. So this is not bullish, but 2% over 190% is very minor. So as long as we are above 70, 180, it's fine. If we go below, it means market makers are not scared of this 800 strike and they're just selling call options without protection. This high volatility means protection for them, means they're scared, means it's bullish. So this is how I relate what I find on the option market. Like I check the volatility, I check the strikes, I check the open interest, I check the total synthetic short, and I check the maximum synthetic short. And when I check all this information, they're all telling me the same thing, is that people are very bullish. And when people are bullish, usually institutional clients are following the retail investors. So it's actually telling me that this scenario that is very bullish, guys, very bullish, is still on the table and is still my preferred scenario for now. I'm gonna show you in another video why 800, but I'm just using FIB extensions for now. It's too early to discuss this. Let's first go to the 215 level. Let's get rejected, retested, and then break it out on the upside, and then we're gonna see what is happening. So that's it for me. I hope you guys enjoyed this video, and if you did, please don't forget to click on the sub, like, and bell button so you're gonna be the first to know when I upload anything new. And stay close to shore. I'll see you guys.